Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Let's get this party started. Markets today on this Monday, March 10th, 2014, are trading lower across the board. S&P down about 5.5 points, Dow down 74, NASDAQ down about 12. So it's not a big drop on the day. In all fairness, the markets are somewhat on the resilient side considering some of the news that trickled through over the weekend. And I just want to go over this because I think it's an unbelievably bearish scenario for the global economy. So Chinese news is the main culprit here. Obviously, what's going on in Russia and the Ukraine is pretty negative. It does seem like the annexing of Crimea is going to be a foregone conclusion at this point. Again, the vote in Crimea is, I think, on Friday, whether or not they want to become part of Russia. It's expected to pass, and the Russians are not going to say no to it. So that could cause some big impact around the world based on sanctions being imposed on Russia and some other factors. The other issue, again, as I mentioned, is in China. So China basically came out over the weekend and said that their exports had dropped 18% year over year in the latest month. That's huge, folks. I mean, just think about 18% drop in any type of demand structure. All right, so what's going on there? I mean, what's going on in China? Well, we all know China's a mess, but what it tells us that global demand for Chinese imports, obviously, which are the exports that they're doing, is dropping dramatically. And again, that tells us that there's weakness around the globe that may not be showing up just yet in some of the economic data we see from around the world, including the United States. So that's number one. Also, month over month, crude imports to China dropped 18% as well. Now, why is that important? Well, let me just tell you this. I mean, just think about logically. If an economy last month imported 1 million barrels of oil, right? For growth and machinery and all that other stuff that is used for cars, etc. And then this month they reported only about 800,000. Think about the implications. I mean, that is monstrous. That's basically a 20% drop in usage of this commodity, obviously, this energy commodity. All right, so there's something brewing here. There is something going nuts here in the global picture, especially in China. And we heard about the big bankruptcy on Friday of the solar firm, which could be a domino effect for their shadow banking collapse and so forth. But I mean, overall, folks, these type of things are things that as a longer view trader and investor I start to pay attention to. And my long view is literally like a month out. I mean, it's not very long, but we're not talking about it influencing the markets today. Obviously, they're down slightly today, but they're not very scared about this right now because you still have the buy the dip mentality in the market. You still have the mom and pops, the average investor buying the market with both hands. Margin levels were announced over the weekend, and again, new all-time highs on margin, which is again the amount of money the average investor continues to borrow to buy stocks. So there's a lot of scary kind of metrics out there that are telling us that there's something lurking. It's almost like that monster in the closet. You're not in the closet, you haven't opened the door yet, but you kind of know it's there, and it's just waiting for it to kind of hit the fan, if you will. And that's what our job is, to try to capture that. Now, I have put on quite a few shorts over the last couple weeks and really doing pretty well in them. A couple of the short plays that I'm holding right now. Priceline, look at this, down $20 on the day. Great drop on Priceline. Yahoo, I continue to hold short, down 64 cents today on Yahoo. DuPont, take a look at DuPont, down 6 cents. I'm in the money, just basically on the flat side there, in the money. Just picked that one up late last week. And again, I love that on the short side as well. There's countless other ones out there that I'm continuing to hold as well. But for the most part, we are seeing some solid weakness in the right plays. And this is key. The market's not really down that much. But as long as you find the right chart setups, you should get it. And I have one chart you guys are going to want to follow this afternoon. I already made some money on this, and I'm still holding it short. And Plug is the name, PLUG, folks. Look at this bearish intraday flag pattern right now. Just about to break down. And this actually should break down and go towards the 50 MA. See this little pivot low area right here? Let me put it in a little straighter. That's not very straight. All right, so right here, look at that. That's your target on Plug. And it's still up about 23%, 24% on the day. But again, this stock is way overdone. Again, one of my accounts I couldn't short it in, and then the other with a different broker I actually could. So it might be tough to short, but again, you have to look and say that this is your target area right here on Plug, which is right around, I think it's right around, let me just double check that again by going back to the 10-minute chart. That looks to be right around the 935 level. So 935 would be your target, which is almost a dollar further down based on this flag pattern. And really tremendous move on this stock overall. Ultimately, I think it's going to go down here in the next few days, maybe even lower. But this will be your big support around the $8.25 level. All right, so really quite something to behold on Plug. And if you look at the daily Plug chart again, I mean, it just makes total sense. I actually played puts on this earlier today when it was trading at $11 at the exact highs. I picked up March 22nd, which is March 14 expiration, puts at $10, and I think I paid $1.35 for them, and I sold them for $1.70 within an hour or so as the drop came in. And I mean, think about percentage-wise what that gain is: $1.35 to $1.70. I had 30 of them, so I made a little over $1,000 on those. And now we start to see plugs starting to come back in here as I continue to hold a core position on the short side of PLUG. And again, any stock that rallies this much up, especially with 2 days of this consecutive move. I mean, if you just look at it from where it was before Friday, the stock was trading at $6 and it went to 11. That's almost 100% gain. And it's not like this is that much of a small cap. I think that's what people aren't getting here. Is yes, the stock is priced around $10, $11, whatever, but it's more the importance of understanding the market cap. All right, this company loses $50 million every year right now. They're not even close to turning a profit. The market cap is over $1 billion at this point. All right, and literally it was near bankruptcy. Look at this stock back in December. I mean, just look at this in December. It was basically priced at bankruptcy levels underneath a dollar. So you're talking about a stock going from basically 50 cents to $11. It's going to have a pullback. I mean, it will have a bigger pullback, and it should get to that $8 and change level, maybe as low as $7 in the coming weeks or so. And just common sense here. The other issue is the company's going to have to they're going to have to raise money. They're almost out of money anyways. And again, with the stock price up this high, you can guarantee, not guarantee, but with a high percentage likelihood, expect them to issue a secondary, which is where they sell a bunch of shares, let's say at $9 or $10, and they dilute the current shareholders, and that price should fall based on that as well. So there's a lot of things here. And these are the stocks where it's rare you get a move like this, but when you do, if you know how to react, you can make a lot of money. And right now, I already made a nice chunk of change on the options, and now I'll just hold a little bit of the stock short to continue to look for a profit here. Okay? Now, I just want to go over a couple other charts out there as long as we're talking about some dailies here. Take a look at JPM. So JP Morgan's down a little bit, and this shouldn't be a surprise to anyone because look at what it hit on Friday. Friday daily chart hit double top, and so you're getting a little bit of a pullback here. I mean, that's almost common sense that you would expect that. So again, just something to keep your eyes on there as the stock continues to be under a little pressure. Goldman Sachs is also selling off a little bit here. There was a key level hit on Goldman Sachs. I gave this to my members. I even think I talked about this in the video here for you guys that was free. But this was your resistance point right here. And you can see these pivot lows with this pivot high right here. That equals a little bit of resistance. And sure enough, the stock is seeing a nice little pullback on that. Today. A couple other stocks to note here. Apple, AAPL, up about 75 cents. I've told you guys very recently that Apple is now a contrarian play, where when things are a little scary, money flows into Apple because it pays a decent dividend. Its valuation is reasonable. It's not a growth stock anymore. It's kind of just, it is what it is. So if you want to store money for safety, you go into Apple. That's the way the market looks at it now. Down the line, I actually think Apple's going to get smoked again and see a nice decline, but at least in the short term, the fact is the stock is green while the rest of the market's red, and that is exactly why. So good little reasoning behind that one. Amazon, let's take a look at AMZN. Amazon is down about $2 and change, 50 MA resistance gap window right here. I would still like to see this have one more push up, but again, just please note that that's why you're kind of stalling here, is because you have the 50 MA gap window. And again, technically speaking, if you can just read the technicals simply like I do, which is just price pattern time formation, you can get a basic 80% success rate going in your trades. And again, that is an amazing thing there, and everyone should strive for that. Chevron today, up about 15 cents after selling off early. Oil was taking a hit earlier. Let me just take a look again. Yeah, USO is still down about 50 cents on the day, so still a decent hit on that. Gold today is trading flat on the day. Really not much going on there. Worries out of China kept it from falling anymore. And again, that ETF is holding steady there. How's the UNG doing? Yeah, UNG's up about 17 cents. Daily chart has a great bearish pattern. This is a great bearish pattern on the UNG. However, if something really does go wrong in Russia and the Ukraine, you could see a massive spike up on natural gas prices because of the big pipeline that runs from Russia through Ukraine to Europe. So, that's just one of those things where I personally won't short it myself. Even though this is one of the best patterns out there in the market as a short, I can't do it just because of that rare chance that something like that would happen. By the way, we are seeing plugs starting to come in. And again, just jumping back to plug on the intraday chart, let's bring up the 10-minute chart here. You can see the bearish pattern slowly starting to decline. And again, you'll have a little bit of support right here. All right there. But it should bust through there and actually continue down. The stock is still up 22 cents, 22% on the day. Has no reason to be up there. It was just a massive short squeeze early in the day. And again, we should see this below $10 pretty quick here on another big time flush. All right, part of me almost wouldn't even be surprised if it went negative today, although that's a little taller order. But I wouldn't be surprised, again, if that did happen. Okay. What else do we see here? Any other stocks outstanding that I want to bring up? Tesla today is under some pressure, down about $7 and change. And again, we're seeing a lot of the high flyers getting under some ropes here. Netflix and FLX down about $8.60, even though that's off its lows. It still is down pretty tremendously as well. One stock that's bucking the trend after another upgrade is Facebook. And again, Facebook just keeps getting these upgrades and it keeps the stock propped up. But I'm honestly bearish on Facebook. I think it has no reason to be up in this range. And again, the more upgrades, every upgrade, the stock starts to fall after the upgrade, and then another one comes and it pops back to those highs. But you're not seeing it really make higher highs at this stage. I mean, it's kind of just double topping and then stalling out and then coming back in. So, what's to make me think that this upgrade here is going to be any different and catalyst for another leg up? I don't think so. I personally don't. I think this is just like Apple in 2012 when it was at $700 a share. Market cap wise, they're a little different, but still in the big cap, large cap, mega cap range. So that's going to be an interesting one to watch. All right, folks, enough said. You want to come here, take the 7-day free trial. I'm giving out trade alerts left and right. We're positioning ourselves to be on the right side of this market for the next big move. And again, it's here for the taking. Come join us at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. Take care.